Welcome back. This is Jacob Milliken, Chief Compliance Officer at 9M Investments. Uh, Welcome back to Friday Flows. This week has been a rough week. Almost 7 days going into Friday. There was 6 days today so far. Markets are down again. So almost 7 days of downflows, and that reflects in how people felt and where the flows went this week. Not only did equities have outflows overall, but the ETF universe in general had outflows. Very rarely does that happen, especially the last 5 years as it continues to build and build and build. What did get in flows? Fixed income. People moving from equities or leaving the markets altogether, and then within fixed income, moving there. You can see over the last month, that's quite the change. Negative flows over the last month with equities were $19 billion of equity flows. That flipped on its head this last week. It follows the negative returns that we're seeing in the S&P right now. Looking at from the last week, where did they go? It's quite interesting. So really moving from not only equities, but moving into because they are moving into global equities, just not North American equities. Where did the big numbers go is fixed income, government, primarily treasuries, as I'll show you here in a little bit, kind of give you an idea of where exactly these went. Then fixed income overall took in the second most. Global fixed income, but then again, the global equities were still taking in flows last week, where U.S. equities were not taking in flows. Kind of give you an idea of what that looked like overall. Again, coming out last week, North American. Although interestingly enough, two corporate high yield, municipal high yield also took heavy outflows, and then fixed income overall in the corporate world took outflows. And where were they going? Looking at the individual names, they were going into treasury funds. SHV took in $4 billion, biggest number I've seen for that fund. Bill 1.8 billion over the last week. JP Morgan's Spider's version of a short-term treasury took in 1.1 billion. Huge numbers into short-term treasuries. And pretty much there were some funds going into the S&P 500, Vanguard's version of the 500 fund. JEPI still doing their thing. The ag took in some, but again, treasury, ultra short income. Total bond took in a big number. Treasury. So again, that's where dollars were flowing. We saw the high yield overall. Again, that shows up here. High yield fund outflows. So people were moving from that riskier version of bonds into the ultra short term. So kind of give you an idea of what that looked like with SHV, iShares short-term treasury bond. Flows over the last month, as we've had down days in the markets. This is showing how investors quickly moved into short term. 650, another 680 million, $2 billion day yesterday. So over 4 billion over a 1 week move is a huge move for this fund, as you can see, which typically doesn't have those types of flows. Why are people going here? Very quickly kind of show you the treasury, what you can get in the treasury bonds is why. So 3 month 4.8, a 6 month 5.0, 9 month 5.0, 1 year's 5.16 now. Those are the short-term things. You can get rates that did not exist last January. So that's why people are moving into funds like this to take advantage of that yield. Kind of give you an idea of where the actual returns were last week. A lot of the blockchain miners, digital blockchain, digital anything really, were beat up last week. Typically with returns 2 weeks ago, these guys were all on top, and now they're at the bottom. They kind of flow in big numbers when they are up or down. On the upside, Global Carbon Offset. This is another fund that typically trades high and then be low, very low the next week, giving back gains. So people jumping in and out of funds. An old B drive. This is one of the most volatile funds out there. This and Nope. Uh, Again, week to week, you can have huge gains and huge losses. Picking that right week, good luck with that. So anyway, this is kind of an update of what's going on so far this past week. Um, Again, very much risk off investors, moving into treasuries. And again, why not? 5% for risk-free yield sounds like a good plan to me. So anyway, hope all is good, and hope you have a great weekend.